The housing market is a crucial component of any economy, providing shelter for families, generating employment, and boosting economic growth. However, in 2023, the industry experienced an unusual turn of events as a significant number of home builders abruptly exited the market. This sudden event sent shockwaves throughout the industry, creating a ripple effect that could have far-reaching implications. Experts predict a 20% drop in Florida house prices by 2023. From the previous week ending on January 12, 2023, mortgage rates have decreased from 6.33% to 6.15%. The number of properties for sale on the market fell by 19.6% in December of 2022 as homeowners were less eager to sell. Overall, the sudden exit of home builders from the housing market in 2023 is a concerning development that could have far-reaching implications for the industry. It remains to be seen how this will impact housing prices, availability, and affordability in the coming years. As the industry continues to grapple with this news, it will be important to monitor the situation closely and develop strategies to address the challenges and opportunities that arise. Forbes found that from the high in 2022 to the September of this year, real estate prices dropped in 98 of the 100 largest areas. Another analysis predicts the same phenomenon will spread to more metropolitan areas and regional real estate markets. If housing prices continue to fall, real estate markets are likely to become buyers' markets by 2023. Some would-be purchasers return to the market in the first month of 2023 as a result of historically low mortgage rates, but that trend has since stalled. As a result, home sales prices kept falling. Economists are divided, though, on how much further house values will fall this year. One thing is for sure, there is still a severe shortage of homes throughout the country. Buyers who took advantage of historically low mortgage rates to enter the housing market in recent years are settling down and not moving. To make matters worse, the pace of new house development slowed further in January, adding to the ongoing inventory shortage. Price stability is being hindered in part by a lack of available homes for sale, making homeownership unaffordable for many people. A further decline is expected by the construction industry in 2023. When interest rates increase, they expect additional price declines. The rapidity with which the housing market is cooling is causing concern among builders and developers. As the new year progresses, they anticipate a decline in new orders. It is a popular time for people to consider the purchase or sale of a home, so you are not alone if you are having these thoughts. In light of the recent odd patterns of the property market, it is only natural that you would want to know what the future holds for the market before making any major decisions, such as buying or selling. Real estate market estimates are about as accurate as weather reports. Experts in the field of real estate do their best to predict future events by using available data, but no one can predict the future with absolute certainty. Seeing this kind of situation in 2023, what can investors anticipate? While falling home prices are countered by rising mortgage rates, real estate investors are placed in a difficult and confusing situation. When it comes to investing and purchasing a house, previously frantic buyers and sellers are now practically paralyzed with fear about the future of their assets and the economy as a whole. Rising interest rates are now potential investors for making a purchase of investment property, notwithstanding the considerable decline in housing prices. You'll need a sizable emergency fund and regular income to enter the real estate investment market now. Before jumping into the rental property sector, prospective entrepreneurs should do their homework on the market where they want to operate. You, as a real estate investor, must think about everything happening in the market and shouldn't go on a spending binge blindly just because property prices are decreasing. It's important to think about the present mortgage rates and their potential movement over the following several months. If you want to invest wisely, you need also to research the local market. Avoid diving in headfirst. The more one's knowledge of a market, the greater one's self-assurance in that market. The importance of doing your homework cannot be overstated. The difference between a profitable investment and a loss will depend on it. Regardless of the time of year, Mashwiser, a website, is able to assist investors in locating the optimal offers that correspond to their specific investment requirements. Consumers get access to useful information and reliable market data, allowing them to perform a more thorough and realistic evaluation of investment properties. According to CNN, the slowdown in the U.S. real estate industry extended into December, when house construction dropped. The Census Bureau reported that the percentage of new house building fell by 1.4% in December compared to the previous month and by 21.8% compared to the same month a year earlier. But with a slight drop in mortgage rates in December, builders are more confident about the possibility of improvement in 2023. Significant declines in housing starts were seen in May and July of last year, when increasing mortgage rates discouraged many would-be purchasers from proceeding with their house purchase plans. The number of new construction starts saw a brief uptick in August before gradually declining again. There was also a decline in the number of building permits issued in December. It was down 1.6% from the revised November rate and down 29.9% from the same month and year earlier. According to Kelly Mangold of RCLCO, or Real Estate Consulting, the combination of slightly reduced mortgage rates and discounts and specials on for-sale pricing may bring more buyers to the market, especially now that the historically slow holiday season is over and the spring buying season is approaching. It would be fascinating to see how the home market responds in the first quarter of 2023, given that inflation is also starting to decrease and the employment market remains quite solid. Clearer signs are emerging from the housing industry that the era of record low mortgage rates and a frenzied property market has ended. So here's a peek at what 2023 will bring according to the predictions of real estate professionals. A statement from Realtor.com's chief economist, Danielle Hale, said, "The housing market may feel more like a buyer's market in 2023, after having been a seller's market for many years." Although the 22.8% rise in listings should be good news for buyers, it's primarily due to properties taking longer to sell due to tighter affordability. The national annual median price for for-sale houses in 2023 is projected to increase another 5.4%, less than half the pace seen in 2022. If they decide to sell and find a buyer, homeowners should expect to profit from their home's current high values. Yet, as buyers and sellers retreat from a housing market and economy in transition, we anticipate house sales to be much lower, down 14.1% from 2022. In short, the yearly total for 2023 will be similar to the rate of house sales in late 2022. The most pressing issues that construction companies encountered in 2022, and those that are anticipated for 2023, were the subject of a special question section in the report, released in January of that year. Compared to 2022, when the impacts of the pandemic slowdown were still being felt, the data reveals that builders are less worried about the cost of materials and the availability of workers. Yet, concerns regarding financing and a lack of interest from potential purchasers have increased in recent months. A sizable proportion of those in the construction industry have long-standing worries about inflation's impact on the prices of building supplies and mortgage interest rates. To paraphrase an article published by the Federal Reserve Bank of Minneapolis, 2/3 of the residential sector listed inflation as one of the two main issues they face, not considering consumer demand. That's it for today, guys. If you liked this video, be sure to hit that thumbs up, subscribe to the channel, and press the bell icon for any new updates. See you in the next one.